Hi. I'm just checking my. Uh, Hi, Annie. Can you hear me? Can you hear me? Let me check my voice first. Oh, I can hear that. That's good. Okay, let's start. Hi, everyone. Welcome to Insights with Lily Zhang. Today is my special program, Lily's Property Talk. Today is my first time launch my English version. I've just done one in Chinese, which is 2 hours ago. Now I'm doing my that's why. Oh, at the moment, not many people yet, but that's right. Thank you, Annie. Where's John? Okay, good. Okay, I'm going to start my English program now. Today, I'm going to talk about property, which is basically my profession. Yes, I'm here. I'm on YouTube. Insights with Lily Zhang. Yes, I talk about history. I talk about philosophy. I talk about politics and the news. But in real life, property that's my profession. So I'm basically I've been involved in property for 17 years, including property development, property investment, property financing, and management, sales, and marketing. So that's what I do for a living. And for this YouTube program, that's my hobby. But I think because quite a lot of people I was born in China, and when I was in China. So today I'm going to first introduce myself. This is my first property program. So first I'm going to introduce myself. We just take it more casual. I introduce how I involve with property and what's the pros and cons about property, what's the benefit and risks involved with property, and then I'll talk about the 2020s property trends. But my idea of doing this property program is really sharing, because I've got 17 years of experience in property market, so I would like to share my experience with everyone. And also in future, because personally in this program, I'm not going to sell any property directly, although I have my property sales company. I understand Annie is a real estate agent too. So, but personally, this program wouldn't directly sell any property. So my view is totally neutral, very just rational. But I would like to invite, because I would like to invite quite in future. I would like to invite lots of guest speakers in this profession, property developers, real estate agents, property managers, property investors, residential or commercial. So it will also people in this industry, even in construction industry. I would like to invite people from all sectors of this industry and join my program. So they definitely can introduce their project, but I'll ask some questions. I hope you can learn something from how I ask questions, because I think asking the right question will lead you to the right answer. So in future, I'll get more guest speakers come to my program. So from our conversations, dialects, you can learn more about. We can discuss, share the experience about property industry, property investment. And today, so that's the structure, the format of my English and Chinese version will be pretty much the same, just probably different client base, different audience base. At the moment, I think Europe, America, or Canada, they all in working time. Australia, any you're in Australia, you probably, yeah, I think Australia, it's almost before midnight. I hope you're all well in lockdown, Victoria. I hope you come out of that very soon. So it doesn't matter if you can't catch up with my live streaming. Actually, I just find my Chinese version have more people watching live streaming probably. Yeah, I think in Europe and North America, many people are still working. In China, that's already their weekends. So it doesn't matter, you can watch my video later. So all sorts of, if you like it, you can like and share and subscribe to my channel. If you don't like it, doesn't matter if you like it or not, please leave your comment so we can share more, communicate more. Today is really to introduce me. Oh yeah, that's me. Yeah, I think many Chinese. That's that's me in Frankfurt. This background. Yeah, I like this photo, and it's very almost the highest building in Frankfurt. Very beautiful building, and the back outside window. That's the high-rise building skyscrapers of Frankfurt. I just like this photo. And thank you, York, for taking that photo for me. And I like this photo. That's why I think this reflecting the buildings and properties. That's why I chose this one as the background of my program. Okay, today, back to the real topic. Today I'm going to talk about how I get into property market and why I like property investment, and then I'm going to briefly talk about the 2020 property trends. I already say I was born in China, and in China I didn't involve with any properties. That's why you wouldn't see me talking about Chinese properties. But also there's quite a lot speculations in Chinese property. Oh, I do have property in China, so I'm not going to talk about too much about it. So I'll be more focused on the Western, like Australia, New Zealand, America, Canada, and Europe. I immigrated into New Zealand. In New Zealand, I was a banker. Started with a retail banker and a mortgage banker. That's why in New Zealand, I involved quite a lot with property finance. It's all about residential, and then I became a business manager in the bank. So that's involved with commercial properties. And then that's in 2003, I decided I'm going to quit my banker's job and join my husband then to start, because he is a property developer. Yeah, we still have the company together. That's why. Sorry, I just probably change this a little bit. Is it better? Yeah, I think it looks better here. Yeah, that's why in 2003 I started my own company. Started with mortgage broking, and so from the banking world to mortgage broking, that's all involved with property financing. Because of my then husband, I joined him with my property development as well, because so I involved with property development from scratch, from land purchase to financing to sales and marketing to property management. And also when I moved to Australia, I set up property sales and marketing company, also property management company there. So basically I'm involved with all field of property. Yes, I've done that. So I'm still doing that. Now I'm in Germany. That's why, although I'm doing this YouTube program, but I'm still heavily involved with property. Definitely, I'll do more in Europe. The reason I like property, I think number one rule, from my experience, focus on long-term. I'll say that 3 times. Long-term, long-term, long-term investment. From long-term, it's a simple rule because scarcity. Any investment with scarcity, you will make money. We all know why gold and silver or precious metal all go up in price, because they have scarcity. I'm saying property from long-term view, that's pretty much the same. And we currently have 7 billion people in the world. In 20 years, the projection is we're going to have around 10 billion people. The population is keep growing, but one thing is we can't make more land. Land is scarcity. From ancient time to now, we can't produce. We probably develop more land from farmland to residential land, but that makes that's environmental issues also. We can't just this is still farmland. Even farmland is limited. So land from long-term view is definitely scarcity. That's why long-term view property investment will always give you good return. Like from our experience in Australia and New Zealand and just Western countries, where there's a say 7 to 10 years, the property price will double. Which is pretty much the fact, actually, in New Zealand, in Australia, in Germany. Germans probably previous, they didn't invest in property much because most of them are renters. But the recent 10 years, the property price going up so much in Europe. That's just even 2020 when everything's almost stopped, but property price still keep going up. Especially Paris. Paris, I think, the most expensive city in Europe, and Luxembourg. Luxembourg is a country, but it's a city too. Luxembourg is the most expensive country in Europe. So basically, even in 2020, the price is still going up. My view is long-term property always will give you very good return. And also, long-term view, property is a safe and secured, also very stable investment. In German, it's called Immobilien. That means Immobilien means can move. Immobilien means not moving. So that's why real estate is always safe, because long-term view is safe. As long as you have a long-term view, your strategy is focused on long-term. When I say long-term, I'm talking about 10 years to start with. So long-term view, that's safe. But I already talked about that. 7 to 10 years, property price might double. So it's probably not going to double forever, but long-term view always going up. That's probably will be the case, because the reason, of course, later I'm going to talk about strategy, the location, the country you choose, all sorts of things. Third reason is, at the moment I'm talking about the good reasons why I'm into property. Third is leverage. Like if you walk into a bank, you tell the bank manager, say, I want to buy a house. He will show, very interesting, because I used to be one. I was like, wow, good. Sit down, let's talk. What's about your income? Where's the house? Another scenario, if you go to the bank, you say, well, I want to borrow some money, but I want to put it into the stock market. What the banker will say, okay, it's you probably at the wrong desk, or it's not my responsibility to give you money to invest in. property in stock market. So that's the big difference. Property you can borrow from banks, and also at the moment the reason why in 2020 the property market still hold up is the interest rate keep very low. So, and also at the moment I'm talking about leverage. Property probably is the only investment you can borrow from banks. Also, the bankers love you invest in property market. They don't like you. They're not going to talk to you when you're talking about any other assets. So leverage, that's a good. You only need 20 to 30%, or sometimes even 5% to 10% of the deposit. You can start investing. And fourth, I really like this part, is the passive income. Yeah, I travel 3 continents, from China to New Zealand to Australia to Germany. I seriously appreciate, because I'm involved in property, enable me so I don't have to go to work from 9 to 5. I don't have to stuck in one office, one country. I can go anywhere. I can do property in New Zealand, in Australia, in America, now in Germany. I can do all of that. And also, once you get into some kind of certain scale, pay attention, I'm talking about certain scale, not if you invest in 1 or 2 property, you can give up your day job. Don't do that. Don't do that yet. I give up my day job because I was still doing mortgage broking business. Yeah, I started involved into property development. But if you just invest in 1 or 2 properties, please don't give up your day job. Later I'm going to talk about the cash flow problem you will understand more about. But once you reaching certain scale, you can get the passive income. That means your rental income already can supply you with your living cost. So also plus maybe you can travel. Best thing about property is once you reach in that scale, you don't have to work that much. You don't have to go to the office or work from home at the moment. Yeah, you don't need to work 9 to 5 to make money. Basically, your property is making money for you. We call that passive income. That's the beauty of property investment. But once you reach in a certain level. Number 5, I can talk about more, but these 5 points are the major ones. Taxations. In most countries, government they encourage people to invest in property because it's very capital intensive investment, and also the government they can't build many. For government to build many houses, that's kind of too much. The scale is too big. That's why most Western government, even Chinese government, but Chinese government is different. They make money directly from property market. So in Western countries, most government they encourage property investment by tax incentives. Excuse me. So by tax policy, tax incentives, like many countries, you don't, like for a certain time, you don't have to pay capital gain tax. Like I think in New Zealand and Australia, they probably, after a certain time, I think about, I need to ask my friends in Australia, I forgot now. Is it 5 or 10 years for capital gain tax? You're going to capital gain tax. In Germany, I know if you just purchase a house for yourself and you stay there for after 3 years, if you sell, you don't have to pay capital gain tax. But if it's investment property, after 10 years, if you sell the property, you don't have to pay capital gain tax. I think many major other, and you can get also another one is for your investment property, most of them, almost 100%, 99% of your expenses, like your also including depreciation, that's a accounting term for just on paper depreciation. Every year they can write off part of the value of the house, and your levy, your tax to pay the government, also all sorts of maintenance costs, expenses, that's tax deductible. So from tax point of view, the property give you lots of benefit. Like almost if you keep it, that's why I always focus on long-term investment. You don't get much capital gain tax, and you can offset the property maintenance expenses. You can offset your income. So from tax point of view, you get a lots of benefit for property investment. That's why I was talking about the 5 point. I like property. Everything there's this is the pro part and the con part, just the not so good part about property. Number one is I already say that's also the benefit. That's in the long term. So also that's probably a shortfall of property investment. Means if you want a short-term return, if you want quick money, say if you want make money in 1 year, 2 years, property is not the right choice. The reason I already say that's long term, and 1 or 2 years. Just if you get in and get out in short time, even the cost, well, you can hardly cover your cost. Like you buy and sell, it's all got stamp duty. There's no stamp duty in New Zealand. You got stamp duty cost, you got lawyers cost, you got sales, marketing cost. That's a couple of $100,000s. So after 2 years, maybe you probably on paper you might make 10 or 20,000, but in deducted all those costs, you don't make money. So don't do short term. I always to do this program, that's always my opinion. That's for long term. So that's why if you're thinking about making quick money, property is not there for you. Also, you probably don't need to listen to my program. I'm not going to give you tips to make quick money. Yeah. And second, that's why I was talking about long term. That's a liquidity problem. That's why Germans call that Immobilien. It's not movable assets. So yeah, that's why property will always have the liquidity problem. If you need money in a hurry, your property wouldn't help you at all. Because sell a property, you need marketing, you need to find the right agent, you need to do the marketing, you need the sales campaign, and also even settlement. Most of property settlement at least minimum 1 month, sometimes even 6 months, 1 year. Even settlement takes that long. So if you need, so liquidity is a big problem for property investment. That's of course another problem is cash flow. I heard, especially in English where there are quite a lot of property gurus, they say, every time I see that, they say purchase property with no money down. That's an absolute lie. That's a lie. I'm here telling you the property cash flow is a big problem. Also require some capital. That's money. That's why that stops some people. That's why quite a lot of young people they can't save enough money to buy property, because property investment although you can leverage, but you need at least 10 or 20% deposit. For average property of $300,000, that's about $30,000 to $60,000. You need that. That's why quite a lot of young people struggle to save that much money. That's the starting point. You need some deposit to purchase property. Also, I already mentioned that's the cash flow problem. that's why I was talking about once you reach a certain scale, you can rely on the rental. You can have the passive income. But please don't give up your day job. Number one, when you go to banks, you want to borrow money to purchase property, the bank will definitely look at your income. The income is not from your rental income. Most of the cases, banks only takes like maximum 70% of your rental. That's why they just reckon like 70% of the time you can rent your property out, but maybe 30% of the time your property will be vacant, your tenant might move out, or you're waiting for tenant to move in. So they can't rely on rental, and that means you can't rely on rental. If you just rely on rental, the bank will not give you the loan. That also just tells you you need to use your own money, the rest of the 30%, to support to pay your mortgage. Yeah, that's why cash flow, that's the biggest pain of professions in this industry, from developers to real estate agents to property managers to real estate investors. Cash flow is always the biggest pain. And some people, even Donald Trump actually, go bankrupt in this industry because of cash flow problem. Doesn't matter how much assets you've got, how much equity in the property. If you have cash flow problem, if you can't support to pay the mortgage, you will be forced sale by the bank. So keep it in mind, you need some capital to start with, and you need cash flow to pay the interest of the bank. That's why cash is king. Cash is king in property, definitely. But if you reach in certain scale, you can rely on this cash as well. So that's why I think major thing you probably already, if you remember what I talked about, the pro part, the good part, the bad part, really is on the income, cash flow, and capital requirement to start with. But like any business, there are good part, bad part, benefits, and risks. Any property investment is a business. You have to use that mindset. You have to use like investment. You can have to treat it like a business to do property investment. Yeah, that's why I've been here for 17 years, and I like property. Like any other business, you have trouble, you have good time, you have bad time, you have up and downs, but that's part of life. Life is just like that. Even if you just work for just employees, you still have troubles. Excuse me. Okay. So I've talked about the benefits and risks involved with property investment. And I've already introduced how I got involved with property and my experience in this market. Today, of course, another major part is everybody probably asking in their mind, what's the trend for 2020? Well, 2020 is a difficult year. It's not just for property industry for this market. 2020 is a difficult year for everyone. Imagine if you are a retailer, you own a restaurant, you own a hotel, you are airplane staff. It's just a difficult time. But actually, 2020 for property is a mixed bag. It's so far, it's been holding up pretty well globally. Yeah, I've seen the CBRE's report, PwC's report. It's just mixed feelings. Although, because the property market, basically, the price worldwide it's been holding pretty well. Reasons, I think there are a couple of reasons. Number one, interest rate. Interest rate, we all know, that's historically very low. In Europe, in North America, it's pretty much minus, negative interest. Negative interest is a really good thing. I love it. Yeah, it's almost just like you get free money. Yeah, for 17 years, I've never had any free money to invest in property. That's why, so interest, no, very low interest rate or even negative interest rate is a major part to hold the property price up. Second reason is the whole because property market has really two sides, demand and supply. If the supply is less, demand is strong, the price will holding up very strongly. So when we look at the supply and demand in 2020, the supply, like people are not interested, not very keen to sell their property. Well, number one is most of them, they have to stay at home. So more people will stay at home. So how many people want to sell their home? Almost nobody, right? And also it's not a good time to sell your property because people can't even go to your property to view. I think most of agents, you already feel that. Yeah, you can't do open home. You can't. It's very hard to sell a home just online. Yeah, so that's why that's the supply side. That's why worldwide we've seen property not less property for sale. So the supply side is much less, and demand side we see that's very holding up a lot because everybody knows almost every country is being through lockdown, so people stay at home more. People not and makes people, if you share a house with before you share a house with 2 or 3 other flatmates, it's okay. But if you have to lock down for a month with other strangers, that's very uncomfortable. Also, if your family is a big family, if everybody locked down in a big family, so this time probably lots of people were thinking about, maybe it's time for me to buy my own property. So the demand side is strong. That's why we see in Germany, in Europe, the major capital cities, actually price has been going up, like 8%, 10%, even in United States. New Zealand and Australia, actually it's not 2020, I think Australia already started correction. Because I think Australia's property prices been very high for a long time, for probably 20 or 30 years. Yeah, so Australia, I think it's not just 2020. I think last 2 or 3 years, Australia already started price correction. That's why price has been stable, even going down. So 2020 make it probably much even harder. So that's why we can see 2020 January compare with 2008, property price has been holding up quite well actually. 28, which is crisis started in property market, the subprime market in United States, basically between from 2005 to 2007, 2008, just banks lend out money without income proof, without jobless people they can get. That's a frenzy time of property market. That's a big bubble in 2008. And when that bubble bursts, that's why we see property price going down 50%. So compare this year, 2020, compare with 2008. 2008, the crisis, the big financial crisis, was created by property. But this time, 2020, the crisis was initiated by the pandemic, by a disease. So property probably make people definitely stay at home more. That's why property market holding up quite well. When I talk about property investing, I just analyze like 4 major part, because when I already talking about many times, I focus on long term. I don't intend to analyze the trend this year, next year, 6 months, couple of months. Anytime you will hear people saying good time, bad time, always 50-50 people. Even in boom time, 50% of people will think it's good time to sell. Otherwise, because after that, property price will go down. But the other half will say the property price will keep going up. You will hear totally opposite opinions. In bad time, exactly saying 50-50. 50% people think, wow, the price is so low now, it's time to get in, to get a bargain. But the other side, the other 50 people will say, well, the property price will keep going down, and once you get in, you are losing money. So property market, anytime you always hear opposite opinions. That's why I just focus on analyze 4 major parts, not listen to any expert or property gurus tell you, because you always opposite opinions. So 4 parts how I analyze is, number 1 is interest rate. I already talked about interest rate, because that's totally interest rate and property cycle is so closely correlated. When the interest rate is high, property price going down. When the interest rate is low, property price going up. More people buying that. It's simple, because interest is the cost of money. Interest, the cost, directly affect the cost of your purchase. And you serve, like many people have 20 to 30 years of mortgage. So interest rate is the major part of your cost. Lower interest rate just directly reduce your cost. So the lower interest rate will directly affect more people, more demand. So interest rates, the cycle of interest rate is always a good indicator of property cycle. Number 2 is demographic. You need to know property is so closely related with the living conditions of people. Property is for people to live. So wherever people want to live, wherever people moving towards, the property price will go up. That's why we see, even in 2020, such a bad time, difficult time economically, good countries, I'm talking about law and order, economically prosperous, long-term view, and society is stable. Good countries, especially immigration countries, I like New Zealand, Australia, Canada, America, Europe. You can see those part of Europe. So good countries, the price, long-term view, the price will always go up, because that's where people, that's the environment is good, and that's where people want to live, that's where people want to move to. So number 1 rule is demographic. Yeah, and that's also including the number 1 rule of property investment: location, and location. So if you can't remember anything I talk about in future, I'm going to talk about quite a lot of strategies, how to do in renovation, how to choose property market, and how to choose properties. You only need to, the most important rule you need to remember is location. Location is everything. Yeah, location can help you. Any agent probably will. You can't just trust the agent talk about location. Agent will talk about every location is good location. Yeah, but you need to judge by yourself. Location including which country, which city, which district, which streets and which typical property. Because property market doesn't like stock market. You have the index and going up and down. Property market is so diversified. Different even in same country, same state, same city, same district. The property price, property performance could be totally different. Even just in the same time, some district, some country will go up, some country go down, some district go up, some district go down. Even in the same district, some houses go up, some houses go down. The same house, different conditions, or similar house, different conditions, the price will be different. So when you talk about property investment, that's all about individual strategies. So you need to focus on the typical property. So, and the third point I analyze, regardless about the cycle, the market condition, the third part is the general economical outlook. But this is just as a background information, but you can't, because you can't just add the macro economical conditions. You need to pay attention because it sometimes doesn't affect typical one property. But you need to know, I think the macro environment, the economic environment basically give you the indication of the trend. You need to know the unemployment rate. If the unemployment of a country is going up, obviously people will have less money. If they don't have job, they can't get a bank loan, they can't buy a house. So if the unemployment is going up, the property price definitely will go down. And also that's including the supply, the demand, the consumer confidence. Next, the next one I'm going to talk about the consumption. We are in consumption era. So consumption, I think that's all about, I already talked about demand and supply. Property is it's an investment product also that's closely related to consumption confidence as well. If people are confident to spend money, they intend to buy a new house, buy their first home, or maybe buy more investment house. So if the demand and supply side, the consumption confidence is going up, the property price will go up. So that's the four major part I analyze. Doesn't matter the cycle is going up or down, and because when I talking about property in long term, 10 years, 20 years, you will go through all cycles. You will go through all the up and downs. So it doesn't matter how well you informed, how well you prepared, you have to go through all those up and downs. That's why today I just do a introduction about a brief strategy, and in future I'm going to talk about more specific topics, like just maybe each time just one topic. And the 2020, the trend, I'll say this trend, like a stable property market, I'll say this trend will, for most of good countries, yeah, bad countries, I don't see good part of Chinese property market, although I wouldn't touch that, because there, for investment property, another number one rule for me is has to be freehold land. Only freehold land has the potential of value going up. In China, it's their land is not freehold. Government owns all the land. They just basically they lease for 70 years or something like that. But so, excuse me. So that's why I'm not going to talk about too much about Chinese market, and For 2020, the good countries from, I think 2020 there's a separation line for many industries. And this pandemic basically just accelerating the trend. Like retail is already in trouble a couple of years ago. So all the digital consumer products and everything, I think everything going digital, that's the trend. So it's not just the pandemic caused retail industry in big trouble. That's just the trend keep going. Also, I think the hospitality industry, that's caused by the pandemic, but I think the trend from, even if the pandemic is under control, we probably, because economy is all about human behavior change. After this pandemic, after 2020, I think our consuming behavior, our economical behavior will all change. Even how our working style will change. That's why all these behavior change will change economically. That's why when I see 2020, the interest rate definitely will keep low for quite some time. I don't see any, because every country's economy is in problem. It's difficult. So they print lots of money. Printing money, the side effect of printing money is inflation. That's why. Actually, I didn't mention that. Property is a very good tool to combat inflation, because when the inflation go up, property price go up. Yeah. So the trend for in 2020, even beyond, is that most government will keep printing money, because that's the only way they can stimulate the economy. The major effect of printing money is inflation. Although I was talking about deflation as well, but because of this strategy, I wouldn't say we'll have big inflation, but two force together, I would say the price will be very stable. The real estate property price will be quite stable, and the interest rate will be keeping low for a long time, because no country can afford to increase their interest rate. Just for these two parts, I'll say the price, the property will still become very good investment for people. But on the other hand, the economic outlook is not that good, because I already mentioned unemployment rate. That's a major thing. So for after this pandemic, the lockdown and the economic activities, we see unemployment definitely is going up. I think there are 44 million people in America. The unemployment rate is pretty much 25% to 30%. In Germany, in Europe, the unemployment rate probably around 8 to 10%. So basically, at the moment, still quite a lot of government support. I think if the government support stopped, there will be much higher unemployment. So that's a major risk. That's a very big risk for unemployment for property market. Once people worry about their job, they've lost their job, or their job reduced, it's very hard for them to invest in property. That's why the demand side, I think, will dramatically be affected by this pandemic 2020. So that's why. So from demand side, supply side, like there are good factors like the interest rate, the inflation rate. That's a support part of property market in 2020, but the damage part or dragging part of 2020, that's unemployment rate, economic outlook, also the consumption confidence. If people lost their job, worry about losing their job. If business worry about they don't get enough sales, they don't get enough profit, people will not spend more money. People will be more and more hesitate to buy property. The reason I already said property is a cash flow, is involve quite a lot capital and cash business. So I'll say 2020. Best scenario is keep some part will keep going up. Some part will be quite stable, but generally 2020's trend for property will be stable. But some like Australia already in correction, the price correction, this probably will keep longer. The correction of the price will keep longer, but it's not just caused by this pandemic. It's been going on for a couple of years. But which part? I would say I really love residential property. That's because I involve more. But I think long term, because I involve with long term, and we have commercial property as well. Commercial property, a good and bad part. Commercial property mainly is for people, they have large amount of capital. Also, they have more experience. It's for more experienced property investors, because property in commercial property, you need to do lots of due diligence. You need quite a lot expertise in this industry. So, and residential property in 2020, I think it's going to hold up quite well. And because more and more people will go, more and more people probably need a home. If they didn't have a home before, they probably, instead of renting share houses, they probably really wanted to have their own house, to just in case being knocked down a couple of times. That's possible. Yeah, we have second wave and maybe third wave, something like that. The pandemic, we have to be coexisted with it. So the demand's still there. And residential, I think, and quite a lot, that's another trend. Start from 2020, probably beyond, will be more and more people work from home. Yeah, once you work from home, you need more spaces. You need your living spaces, and definitely you need a home office. That's why more and more people work from home, and this trend is ongoing. I think once business and people get used to work from home, I think many people will keep to work from home. That's why I think residential property will holding up quite well. Long term is a good investment. Commercial, I already say, commercial is quite advanced. And also from 2020, that's a big separating line for commercial properties. Some parts doing well, some sectors doing very bad. The bad ones I already talked about: retail, hospitality, some office, and aged care. Retail, I already say, that's a trend for a couple of years, because most of things going digital, and more things going digital. So I think this behavior will keep. People will keep this behavior. We already get used to purchase on Amazon, eBay, and that's why people just go to. I've been to so many shopping malls in Europe, in Germany, in France, in Belgium. It's sad to see how empty they were. Yeah, because because Germany already opened up, and quite a lot of European cities opened up, but people not going back. Many businesses not going back. People they just get used to purchase online. So I think this trend will keep going on. That's why I don't see retail property is going to be big trouble. Hospitality, that's more this year's thing, but I'll say probably once hotels, restaurants, cafes, bars. At the moment, it's temporary, but it really depends on how this pandemic under control. So I don't think this pandemic will be under control in short term. We probably, I think, if we have a vaccine or have effective treatment, the pandemic will be under control, but I would say probably at least 1 or 2 years. So hospitality, those conference venues, hotels, bars, restaurants, those public venues, those commercial properties will struggle for at least 1 or 2 years. And another big part is office. Already saying the reason many people work from home. And people probably work if I still work for a company and after 2 or 3 months I work from home and I can get my job done. What do you think? I'll definitely prefer to stay at home. And for business, they probably like that too, because they definitely can have a smaller office, and most of them, their employees work from home, so they can downsize their office. Before, they have to pay, for example, $100,000 for a year for office, and after 2020, they probably recognize they only need a small office or just need a conference room for people to have meetings. So they probably only need to pay $20,000 for a smaller office. Yeah, so I would say lots of office buildings will be in trouble. Yeah, that's very difficult for commercial property part, because for commercial property, compare with residential, one tenant move out after a couple of weeks, you can get another one move in. But for commercial, once one tenant move out, you gotta wait for a long time for another tenant to move in. And also this time, how many companies will enlarge their office? So yeah, office part is going to be in big trouble. Another one is aged care. Gee, I'm almost talking 1 hour. Aged care, yeah, in America, in Australia, especially Victoria, many deaths of the pandemic happened in aged care. So aged care, I think probably the property will be the design of the property will move to more home-like, not so concentrated in one building. So many elderlies living in one building. Probably, I'm thinking about in future, aged care will be more in individual units. They probably have a couple or something like that live there. People more like, I think psychologically or health benefit side, more elderly people will like that. They still like living in their house, but have all the benefit of the caring they need. So these, like retail, hospitality, office, aged care, these 4 parts are the bad ones of commercial property. But there are losers, there'll be winners. Winners will be anything with digital economy, digital like logistic. If you buy things online, how can they deliver to you? They need logistic. So transporting, warehouse, like Amazon's business is booming. Amazon's warehouse business is booming. So those properties were going quite well. And another part is industry or manufacturing, because these ones are not affected by the pandemic much. So commercial property, there are some losers, winners. Today I just do a brief introduction. In future, I'm going to talk about more on the details. Also, I'm going to invite lots of guest speakers from all sectors of this industry. We talk about property. Yeah, and that's my opinion on conclusion is 2020 is a difficult year for every business, for every industry, but comparatively, property industry is relatively stable and safer. And the trend for good locations and I think the price will hold up quite well, even going up. But some part will go down. But property market, but my thoughts on property market, you can buy property anytime. It's nobody can predict the cycle of property. Nobody know exactly when is the peak, when is the bottom. Nobody knows. No gurus know. Even billionaires. Oh, Donald Trump's bankrupted a couple of times. So you don't have to, because all these, you can analyze those factors. But most importantly, the rule, I repeated. Number one rule is long-term. You have to have a long-term strategy, long-term view, long-term attitude. For property, everything gotta be long-term. Number two is location, location, and location. Property is all in patches. It doesn't matter which country you are in, which continent you are in. It's all about individual properties, individual deals. You can buy property in boom time, in bottom time, in good time, in bad time. But most importantly is to do your homework, do all sorts of due diligence and negotiate. So that's my fundamental strategy for property. I already conclude that. Okay, it's I already talked about property for 1 hour. That's quite long. And thank you very much, Annie. You are so good. And if you can't catch up with my streaming, you can watch my video later. I know most of you are still working, and some of my Australian people, you're already sleeping. So thank you very much for watching my program. And if you like it, please send me a like and share my video to other people. Most importantly, subscribe to my channel. If you don't like it, doesn't matter, give me your comments. Yeah. Okay, thank you very much. I see you next week. Bye bye.